Well, a number of key industries have been flagged for skilled jobs growth over the next 12 months. The latest Clarius Skills Indicator showing the lower Aussie dollar should boost activity in trade-exposed sectors outside mining. Well, let's get the latest on this. Joining us live from Melbourne, Paul Barbaro, Executive General Manager of the Clarius Group. Paul, thank you so much for your time. Thank you for your patience too. Just in terms of the sectors identified for growth, take us through those.
Well, the first thing to recall, this is the fifth consecutive month where we've seen deteriorating conditions, but the one sector that has stood up better than most others has been the marketing, the digital sales in particular. That's got a shortfall of over 500 people. So out of the 10 sectors that we measure, unfortunately, it's the only one at this point that is showing signs of sustained growth into the coming future.
So, obviously ahead of the official employment data later this week, what are you tipping for the labour market then over the course of the rest of the year?
Look, our indicator implies that between now and September, conditions will continue to moderate and in some cases deteriorate. We entered 2014 with a renewed sense of optimism. That optimism hasn't materialised in real figures as yet. We're expecting between now and September for, as I said, those statistics to moderate. In some sectors deteriorate, but we're hopeful thereafter that if our forecasts are accurate, and we've got no reason to believe they're not, that we will see markets improve. Emphasis will be placed in construction. If some of the infrastructure projects that state and federal governments have posed to implement come to fruition, that will have a significant impact in the construction sector. Tourism, with the enthusiastic Chinese wanting to come to Australia, will also be an area that we forecast growth. And in education, as our tertiary education sector continues to provide placements for international students. They're the three areas that we see being significant growth areas post-September.
Just in terms of, the way employers are positioning themselves as well, what are the indications you're getting? You talk about, identifying good talent in readiness for growth. What do you see there?
Look, the vast majority of clients over the last 2 years have done several things. First and foremost, contain their costs. The second thing is exhaust all leave liabilities for the sake of clearing balance sheets and making themselves as nimble as possible. But the attraction of key talent remains the most significant thing that employers should be doing. And if markets do rebound later this year, now's the time for employment groups to start investing heavily in finding quality resources. And what we're seeing is a lot of employers not wanting to inflate costs by way of increasing their permanent headcount, but looking at more contract-based clients so that they have got the flexibility of scaling up or down. So employers now are really beginning to invest in key talent, particularly at the higher end, which still remains in shortage in some cases.
And obviously we've got the budget coming up. Is there a sense too that they are just waiting to get over that as well to see what changes will come into effect?
Look, there's no question that every time a budget is announced that there is a level of conservatism in the business community. I think the area that is probably going to benefit most is that in the construction. If many of the infrastructure projects, as I mentioned earlier, are indeed funded, I think that's going to have a significant impact in terms of the employment landscape. But absolutely, clients at the moment are just waiting to see what the budget holds and what impacts that's going to have.
And definitely, though, in terms of higher skilled versus lower skilled workers, the surplus still being more towards that lower skilled base?
Look, absolutely. The index that we cover looks at 35% of the total marketplace, which is the white-collar professional, or 8 million people. The vast majority of the big unemployment still resides in the unskilled area of hospitality and the like. So that really is where the most pain is currently being felt.
Paul, really appreciate your time taking us through that latest indicator.
Thank you very much.
Clarius Skills Indicator just out this morning. Do stay with us. We're taking